Well, hello, everybody. My name is Scott Kelly. I am the CEO of Black Dog Venture Partners and your host for today's VC Fast Pitch. Thank you all for joining us. I'm going to share my screen in just a moment. I'm going to ask a couple of things. One, please keep your mics muted until prompted to do so. If you can, please keep the chat open and clean and clear until we prompt you to do that. And then obviously, if you could, no taking app. So with that, Matthew, if you're on the call, as people join the wait room, if you could just add them, that'll be great. I'll try to manage that as best I can. But let's do this. I'm going to share my screen and go over our agenda for today. Let's see. Okay, you should be able to. Let's undo that for 1 second. Bear with me. I'm going to try to share screen again. There we go. And you should be slide on zero mode. Bear with me 1 second. I'll leave my and see my slides. Give me a thumbs up either in chat or on your screen. That'll be great. It was really a tad slow. So, anyway, welcome to today's VC Fast Pitch. And once I get my slides to fully load, I can go over those. Why they're not working, I do not know, but I can wing it. Anyway, again, there we go. We're live. Fantastic. Let's do this. Okay. Okay. Well, first of all, I want to thank today's sponsor, Justworks. They're going to be doing a little bit of a short presentation at the end regarding our new partnership and opportunity to help provide more value in our network. So,
am I the only one that can't hear him?
Nope.
No, lost him too.
He just
Okay.
left.
He
Oh, he-
disappeared.
Seemed like he had some connection issues. He was a little bit breaking up a little bit.
Scott, you're muted.
thank you. Okay, we're going to get this right eventually. I absolutely promise. So awesome. Thank you, everybody. My name is Scott Kelly. Take two. Welcome to today's VC Fast Pitch. And good thing I have editors to edit all this stuff for me. So I'm going to be sharing my screen in just a moment. Let's see if it works this time. We love technology. Okay. Okay, I think it's about there. Awesome. Okay, should be coming up alive in just a moment. I got the red and blue circle of death at the moment. Let's see if we're through that. But anyway, I'll just go to wing it. So our agenda for today is obviously I'm going to be going over some of the logistics and agenda for today. In a couple of minutes, we're going to be doing investor introductions. Basically, what we're going to do is we're going to ask the investors to share a bit about themselves, and then more importantly, tell them about what they want to hear in a presentation today. After that, we're going to jump right into our company presentations. Our presenters today, which I'll announce in just a couple of moments, will have exactly 5 minutes to do their presentation. I'll be sitting here with my phone. I'm going to be hit it at the 5-minute timer. Once they get started, I will throw a 30-second warning in chat. And then at the end of 5 minutes, I cut you off. At that point, we're going to have our investors do questions with our panelists, our presenting companies. After we go through all our presenting companies, we generally have a general investor Q&A session. This is an opportunity for all of our attendees to ask some questions of our investors. And then we'll close out the recording after we've done all that. And then we allow for some open networking. And this is where you can kind of really just chat amongst yourselves and promote amongst yourselves. So we do that after the recording, not during the recording. So we got some great presenting companies today. We've got Zach from Hook Security, Upen from Heroes at Work. We've got Bob from PropertyLens, Tim with Rare Breed, Tom with MeasuredRisk, Moon World presented by Jordan Freda, iNote with Alex, and in the end, we're going to have our short presentation about our new partnership with Nick at Justworks. So here are some of the rules. Like I said before, let's keep your mic muted until prompted to unmute. We want to make sure that the presenting companies can do their presentations unobstructed. Don't record, don't use note-taking apps. I'm going to send you all the recordings and all the information, all the presenting companies after the event. If you have a question, I'd like to recommend use the Zoom hand up feature to answer your question. After each presentation, we're going to do Q&A from investor panelists first. If there's some time allowed, I may open it up to some general questions from our audience, but we want to make sure that our presenting companies get an opportunity to get their questions taken from the investors and an opportunity to answer those questions. When we go to open networking questions, a question is not an opportunity to pitch, and don't post anything in chat until prompted to do so. And if you've been to my events before, my motto is show me the money. And with that, I'm going to unshare my screen, and we are going to get to the getting. So let's do this. We have got a lot of great investors on the panel today, and I'm just going to go around the virtual room. And what I'm going to do first, I'm going to ask our investors to do two things. One, share a bit about their background and how they invest and what they invest. And then importantly, I want you to tell their presenting companies today what you want to hear from them in an investor pitch. And again, Pierre and everyone else, no posting in chat. I do not want to eliminate you from the room. You'll get your opportunity. Your opportunity is not now. With that, I'm going to introduce our investor panelists. The first person on my screen is Itamar from Recursive Ventures. So I get to pick on you first, Itamar. You're new. So Itamar, why don't you share a little about yourself, and then tell everybody in the presenting companies what you want to hear today.
Thanks for having me, Scott. Excited to be here today. Itamar Novik. I'm based in Silicon Valley. I've been in tech and startups for 25 years, which is pretty much my entire career. I'm a serial entrepreneur and executive. My last company, Life360, is publicly traded on the NASDAQ. I'm also an investor. I've been investing in startups, mostly the pre-seed and seed stage since 2010. I've done 172 investments, out of which 2 are decacorns, another 5 are unicorns. I have 3 IPOs in my portfolio and 21 successful M&As. These days, I invest out of Recursive Ventures 3, which is a solo capitalist fund. That's just me. A $30 million fund, $500K to $1 million checks, focused on data and AI related projects. And mostly what I look in early stage pitches are team, TAM, and moat. And obviously, I can talk more about that, but I'd like to make sure we've got enough time for the other investors to present themselves.
Fantastic. Thanks for joining us, Itamar. I appreciate that. So, Ed Lafferty, you're up next. Tell everybody about yourself and what you want to hear in your presentations today.
Scott, thanks for having me. Nice to see you. My name's Ed Lafferty. I'm with Saturn Partners. We've been investing in early stage companies since the early 2000s. We started our first fund. We're on our 3rd fund right now. How we typically invest is we invest in the early stages of companies, follow them along in our fund. And then once we see breakouts, we create SPV vehicles, which we kind of back up the truck and invest in the later stage rounds. So that's been our model for the last 20 years, which has served us nicely. What I like to see is exactly what Itamar said. You know, it's the same thing that he's looking for, we're looking for too. We focus on management teams, especially though. We realize that the best technology doesn't always win, but the best management team usually does. So we want to focus on management teams and why we should invest in you as a person, not just the technology, but why I should entrust you with our capital. So that's my main focus. Thanks everybody for showing up, and look forward to hearing the rest.
Fantastic. Thanks, Ed, for joining us. Tim Holiday. Tim, welcome. Share a little bit about Space Station and your theme, focus, and then what you want to hear today.
Yeah, so Space Station Investments, 110 portfolio companies. And until Itamar showed up, we had the most. 170 can't even touch that, man. So congrats on the new reigning title. But We syndicate all of our deals so far, although right now, as of this week, just started to raise our own $40 million fund. We are early stage consumer. And so you're talking companies like Magic Spoon, Olipop, Aura Ring. We just closed with Beast Industries, so Mr. Beast and his kind of creator economy consumer play. And we bring interesting people, creators, pro athletes, Olympians into our rounds in these SPVs. And then, of course, in a fund scenario in the future, we'll do the same. And just love looking at great consumer companies. And for us, and for me specifically, it's founder, product, progress. I'd love to hear on the progress side. It's like, I'd love to hear about your product, what you're doing, what you're building, but where are you in the process right now?
Fantastic. Thanks, Tim. Miriam, you're new to our panel today, so welcome. And Miriam, why don't you share with everybody, again, like everybody else, a bit about yourself and then what you want to hear in the presentations today.
Thanks for having me, Scott. I'm Miriam Altman-Reyes, GP in Brassring Ventures. We're a new fund investing in technology for economic mobility, so education, future of work, health and financial inclusion technologies, mostly seed stage to Series A. We do some pre-seed as well. My background, I'm an exited founder myself, founding CEO of an ed tech company acquired by a publicly traded company a couple of years ago. And our kind of unique model is that we have what we call a growth studio alongside the fund. So we take a very hands-on approach, really leveraging our operator expertise to help companies really get from point A to point B and cross the chasm to the next stage after seed, Series A, profitability, et cetera. And I've been able to bring back together my team from my last company to really help me do that. So you get kind of the best of the best, in my opinion. What I'm looking for today from founders are, want to make sure that there's great founder market fit, that you're the right people to be building this company, that you really are in it, that you have the experience on the ground from prior, work or lived experience to be building what you're building. Companies that have some level of traction as well. I want to hear about that traction, especially with, obviously sales and customer retention, et cetera. And I think I'll leave it at that. Those are the two things I'm most excited about. Thanks for having me again.
Fantastic. Thanks, Miriam. Welcome. And thanks for joining us. So Dan Glutt, Dan, how are you today?
I'm doing great. Thanks for having me.
You always have the best shirts on these calls. I gotta go to your springtime beach wear store.
A man
Dan, thanks for joining us.
A man of leisure.
Share a little bit about your work and then investment thesis and what do you want to hear today from the presentations?
Yeah, I'm a co-founder of Hatter Angels. It's we're now in our 9th cohort at Stetson University. We are an actual fund run by students. We actually have our culmination of this semester on Monday. Anybody who's interested, just you can email me or Scott. He'll have a copy of it of 3 companies that we're pitching. We've invested in 8 companies. We've written 11 checks totaling a little over $1.5 million over the last 4.5 years. It's a student-led fund. Our students will sit on the board as board observers. One of Black Dog's early employees was a music major at Stetson. He took our class not once, not twice, but 3 times, and now he's a VC in Tampa. So class sizes at Stetson are typically 12, so we get a very intimate class, and it's a lot of fun. If you're interested in learning more, hatterangels.com. Investment thesis, we are agnostic. We kind of stay away from med tech. Everything else is fair game. Fit with the founders usurps everything. You're either a fit or not a fit. We've got to fall in love with the founders. We're looking at a lot of defense companies, AI companies, and fintech kind of seems to be our fit. We use the Florida Venture Forum, Black Dog Ventures, and Venture Atlanta, and a number of other sources for deal flow. And it's always a great day when you're with Scott. You run a great ship, and thank you for all that you do for the ecosystem.
Thank you, Dan. I appreciate that. Brian, I'm not sure you're on the road and you can jump on the call, but if you are.
Thanks for the
invite. Are you there? Awesome. Yeah. Thanks, Brian. Well, you know the drill. Tell us about yourself and then tell us what you want to hear.
Yeah, Brian Neer, I'm the CIO of Near Venture Partners. For once, I'm the person with the third largest number of investments in the room. I have 62 investments, net of 10 exits, half of which were positive. I'm focused mainly on fintech and emerging markets, but we have a very broad mandate. As long as it's not healthcare or crypto or something that's bad for the world, we're very interested. What I'd like to see really is just the basics. This is a first meeting, so I want to understand what's the problem, what's the solution, why you guys as a team, what your traction is, and if it's quantifiable, meaning if there's revenue or pilots, talk about them, and then what the valuation of your round is. And that's kind of how I'll decide, okay, is there a second meeting if there's interest on both sides? But thank you very much for the invite. Look forward to hearing the presentations.
Thanks, Brian. Thanks for joining us. I know we got a few others. I don't know their Zoom handles by name, so I'm going to see if they're here. Do we have, is Chris Chubley on the call? Chris, are you there? We have a few that may be jumping in later. What about, let's see, do we have Travis or David Blackledge or Eric Minnick? I think they'll be coming on a little bit later. So if they come on, I'll probably take a break and let them introduce themselves. Is there anyone else that we have on the panel that I missed? If you can, just raise your hand, and I apologize in advance. I want to make sure I give you your opportunity to share a bit about yourself. All righty. I know we have some more folks coming on soon, so let's do this. Let's kind of jump into it. I'm going to throw in chat our presenting companies in order presentation. So just bear with me. Let me just get that in front of me. 1 second. Okay. I believe I actually, there we go. I'm going to throw this in chat just so all our presenting companies know the order. Now we may move the order just a bit from time to time, but let's do this. So first, so like I said, we've got Zach starting first, followed by Upen, Bob Frady, Tim McGraw, Tom Albert, Jordan Freda, Alex Levkin, and then Nick at the end. So let's do this. Zach, are you there? Zach Eikenberry.
Yes, sir.
All right. If you can share your screen. And what I'm going to do is I'm going to, Zach is a successful alum from a couple of VC Fast Pitch events, but he's at it again. So, all right, Zach, when you get your screen ready, okay, I'm going to count you down in just a second, and then I'm going to give you a 30-second warning in chat, and we are good to go. So 3, 2, 1, go.
Awesome. Yes, it's good to be here today. So my name is Zach Eikenberry, co-founder, CEO of Hook Security. So Hook Security, we solve the hardest training and learning problems in an organization. And in particular, we address the cybersecurity and compliance market. So I'll get into that a little bit more towards the end here about how we do that. But a little bit about myself before we jump in. I am an experienced founder, have had previous exits, and immediately before Hook Security, I actually started 2 high schools and a middle school in the upstate of South Carolina. So when coming to the cybersecurity space, I'm bringing a unique perspective. I'm the only educator I'm aware of that's started a cybersecurity training company. And so I'm constantly thinking about the learner and the student and your colleague and employee, and how do you help them learn what the latest threats are, how to be compliant in your organization, etc., when they're oftentimes just don't want to. And that's a very hard problem for organizations today. And that's where Hook Security steps in. So I'll give you some of the high-level bullet points out of the gate here. We're at 1.95 million ARR today. Right now, pipeline, we're going to cross 2 million end of May, early June at this point. Have tremendous retention rates, 95% GRR, 102% net return revenue. We're a mighty team of 10 people. We are at a cash flow break-even spot right now, headed towards profitability Q4 2025. So a few things that underline our go-to-market. We are unique in that most of our revenues actually come through managed service providers who purchase our solution and turn around and resell it to their small businesses. So Um, the majority of our customers on our platform are your law firms, your attorneys, your manufacturers, your dental offices, etc. But we also have something on the other side where about 40% of our revenue, and this is all inbound to us, come from large enterprises. So I'll mention this a little bit more later as well, but we are coming off an amazing month. That's part of the reason I reached out to Scott about this fast pitch. In March and April here, we've signed, well, sorry, in March alone, we signed 110K new ARR. We're hitting new breakout moments for us. And included in that, we signed Warner Brothers and Lowe's Home Improvement. So those are all inbound to us. We don't go outbound and market towards those at this point because we are a seed stage company. So we're talking today about a final check before we go raise our Series A later on this year. But let's back up. Some of you might not be familiar with our industry or what is security training. What does it mean? It is a space that is growing rapidly. We're the little engine that could when it comes to cybersecurity and software spend, in that each year it just quietly ticks up, ticks up, ticks up. So we are, as far as I can tell, we are in the fastest growing niche within the cybersecurity landscape. So when you think about who's buying security training, it's often the security teams, and that market size is continually compounding and growing, and we're part of that wave. So back to us. What do we really solve for? Well, some people in the training space, they solve for compliance. Let's just check the box. Some folks solve for risk. How do we figure out which employees are doing what, and how do we mitigate them? What we solve for is the employee attention problem, which we argue is the hardest one to tackle. And what we do is we create not only engaging solutions, we provide the training in different spaces than any of our competitors, which is, again, something that makes us unique. And I'll talk about that on the next slide. But that is something for us to dive into further. And I'd love to with anybody who's interested. So I mentioned a few of these things. What makes us unique? We are the only provider that I know that is both a software solution, a SaaS company, that also has a full in-house content studio. And we can sell just our content into learning management solutions in the enterprise. That's why enterprises love us. Our platform delivers the training inside of Slack and inside of Teams, so you don't need another platform, you don't need another tool, you don't need another browser tab in order to take our training, which what resellers, enterprises love. Train employees where they are. And skipping to the last one, I think it's very important to understand where we fit in the industry. 70% of our customers come from a large legacy provider in Clearwater, KnowBe4, and the vast majority, if 95% plus of all the subscribers on us today had a previous trainer. And so
Zach,
we're often seen as the upgrade.
Zach, we're at 5 minutes plus.
Oh, I'm sorry, I missed your chat note.
No worries. Well, we can cover this in Q&A. So what we do this, if some of our investor panelists has a question, please use the raise your hand function, and Zach is more than willing to answer those questions. So if you have a question, you can either post it in chat, or you can use the raise hand function, or just unmute yourself and ask the question. So, Zach, we've been working together for a little bit. In fact, we're planning an event in the fall, as it applies to deepfake. So maybe you can share a little bit about that, and really where some coming trends are and the coming opportunities are, in your space.
Yeah. So right now, the largest and fastest growing threat when it comes to cyber attacks targeting employees is deepfakes, right? So part of what our promise is and why our churn is so low is it's like buying a Netflix subscription that is constantly updating, because the threat landscape changes. You expect your training provider to update and change, and that gives us a competitive edge. And in particular, in the Southeast, there's still a dearth of folks tackling this deepfake issue. And so we see it as our responsibility to be on the forefront of those conversations, providing deepfake simulation and deepfake training. And so we're going to be launching a local conference in the fall just tackling that. But that's an example of a number of rising issues that require new training to modern organizations.
And Zach, you also recently, oh, Ed, why don't you jump me the question? Go ahead, Ed.
Hey, Zach, I just wanted to know do you create these custom per customer, or are these something that are just, you have a library of and you roll them out to customers?
We will take roadmap requests from customers, but we have a library that we provide. And so most of our work is the equivalent of sketch comedy with live human actors. So we don't touch animation. We don't do any of the old school training techniques. And so we provide, right now we have 180 courses that we've created in our IP in our library. And all of them are available in at least 8 languages. And so that's also a value add to a number of our larger clients.
Thank you.
Right, thanks. And Edamar, you have a question for Zach? Go ahead.
Yeah, so I have 2 questions. So first of all, what's the differentiation? What's the moat here? What prevents a new entrant or an existing from just, doing what you're doing? I don't understand that. And that's the first question. The second question is, in this era of AI, I mean, I can definitely see a near-term future almost where a lot of this content can be generated on the fly with AI. CISOs can sit and potentially do a bunch of even like the whole training session with AI at some point. I know it's not there today, but give it 5 years or whatnot. So how are you gonna, be able to defend against that when basically your content, your IP, the value of it basically, goes to zero almost in this new environment?
Yeah, it's an interesting question, and perhaps a hypothesis. The first question is what's the moat, right? And I do think our distribution and our brand through the channel, through MSPs, creates a really interesting moat. I also think that we have a moat in that we're not the sexiest industry to tackle with AI or large checks right now. So we're a neglected part of the world, which creates high valuation for people who want to actually resolve the issues within awareness training. To your other question, of course, we use AI to build our training, and we leverage that out faster and better at scale than anybody could do it internally. So I think part of your question is asking, what happens if all of a sudden security teams want to move from STEM to liberal arts? What if they want to go from figuring out what's going on with their computer to figuring out what's going on in people's heads? I don't see that jump. Right now, there's actually a number of movements, including like Warner Brothers, who has been doing their training in-house for the last 3 years. They licensed us because we understand the training experience better than they can build internally. And so I do think there's a room for experts, and I do think there's a room for the best in this space, and I think we can be one of them. And we could talk more philosophically about the future of commoditization of training, if that's helpful, one-on-one.
Awesome. Thanks for that question, Edamar. We have 1 or 2 more questions for Zach from our investors. So Zach, maybe you could share a little bit. I know you recently made an acquisition. Maybe you could share a little bit about that and how that's going to be creative going forward. But let's pause on that question. Let's get Miriam's question. Miriam, go ahead.
Yeah, thank you. Excuse me, my question was somewhat related. What do you see as the potential, exit pathway or the long-term opportunity for the company?
Yeah, so I think at the end of this year, we're going to be at an interesting crossroads between acquisition and Series A for us. I think that's going to the surface area for folks interested in acquiring us is really large right now. We field a number of inbound. I've got unsolicited term sheets for acquisition already, and so I think what we're going to be deciding what is the best path forward. Right now, we believe Series A in Q4 this year will be the next step in that journey. But most companies like ours, very few of them ever break out to become just their own platform and their own IPO. And so I think realistically, you end up being part of a larger organization's offering over time once you mature your offering to the world. So I don't think acquisition is happening in the immediate future until we really cross that, next milestone is 10 million ARR in our industry. And then after that, the 50, 100. So I think that's the path we're on overall. I didn't say it, so we are just looking right now for our last check as part of our seed extension. And then we'll talk about future capital needs after we hit profitability and we have a little more. Right now we're cash flow break even, so we're good in and out each month. But we'd like to have just optionality in the last quarter of this month or this year before we raise. That's our
Thank you.
target.
Thanks, Miriam. We can take one more question for Zach if anyone has it. All righty. All right, like I said, we'll get this slide presentation and the recording for Zach and all our presenting companies out to everybody after the call. Thank you, Zach, for jumping in. Appreciate that. So,
thank you all.
All right, Upen, are you there? And can you share your screen?
Okay.
Maybe
It's
Zach,
not allowing me to share. Okay.
there you go. You should be good now.
Can everybody see this one?
It's coming up. You already go in presentation mode. Are you good right there?
Okay, heroes
Okay.
at work. My name is Upen.
Hold on, Upen. Let me count you down. I'll count you down. 3, 2, 1. Look in chat for a 30-second warning. 3, 2, 1, go.
Hey, good afternoon, guys. I'm a founder for Heroes at Work. Our motto is get recognized for your hard work. We help employee and professionals to get recognized with our simple technology, and which help them to get benefit through the recognition. I'm a healthcare worker with 15 years of experience. I have seen more than 30,000 patients in my life, and each time after serving, I got so many great verbal comment, and which was helping me to do the better for my next client. And I was wondering that how we can get this verbal comment into the digitally. And I was looking for a platform. I couldn't find it. That's how we came up with the idea. The way Google is allowing business to take reviews and business are getting benefit out of those reviews, we are doing the same thing, but it is for the employee and professional. When somebody says something nice about their services, they can ask them to write it down under their name and they can use it for their own benefit. So the main problem in the industry is the lack of recognition for employee and professional. So that's where we are working on. So when you get recognized, you have a better career advancement compared to the not getting recognized or not able to capture it. The current industry has many stuff going on, stress, work-life balance. So getting recognized, getting reward, help you to fight with the depression and those. We are primarily focusing healthcare, which has a high churn rate. Hiring one person in healthcare costs $30,000. And if 33% are leaving the job within 1 month, 6 months, then they are losing a lot of money. So we want to get recognition, reward, and help turn into the retention of the employee. Employee, how they are getting benefit, they are getting recognized, they are able to share those recognition with their families, friends, their manager, and they can showcase their talent. How the business is getting benefit, they can turn into the recognition, retention rate, which is the main thing right now. So many people are leaving the job. Improve their revenue. The way Google is allowing reviews to taken, we are doing through the employee, and they can use those review for their better advancement for the business. We have team of me, Upen, Patel, Himani. She is also a healthcare worker. Our CTO, Vishal, he has 10 years of experience in IT industry. The market is huge. We are going behind the 500 million population who is an employee or the professional. They all can get benefit from our platform. In US, we have more than 100 million users. We can target that one, primarily focusing healthcare. As I said that I have experience, I know the problems going on. Even if we capture the 3%, 5% of the market in next 3 years, we can get a easily monthly revenue of 3 to 5 million with our B2B subscription model. That's where we are going. We have B2B, B2C. B2B, we're gonna charge $3.99 a month per users, and it's gonna paid by the businesses. We're gonna charge $999 one-time cost, which is gonna help them to cover the first month and the training, education, onboarding. For B2C, we kept it very low, $249. Any professional can use it, and they can collect the reviews and they can share it with the future career advancement or the getting more job. Go-to-market strategy, after we raise 750K, we want to get couple advisory board. We want to hire the sales marketing team, starting with the 2 people. And within 6 months to 12 months, we want to get from 2 to 6 to 8, because market is huge and we are the only one with the product right now going behind the healthcare industry. And we're gonna participate into the healthcare conference where we're gonna spread the word and gonna get the people advise about that, how they can get benefit from the platform and retention of the employee. That's our cap table. We are asking for 750K, and we're gonna use those funds towards the growth, developing little bit more. We have developed our platform, IT industry and those kind of stuff. That's our milestone. And if you have any question, I can go for it.
Hey, thank you. Thank you. But yeah, I was actually gonna ask you about this. Investors, if you have a question, use the raise hand function and then I'll call on you to ask your question. So you got this comparator slide. That was the question I was gonna ask you. Maybe you could spend a little more time talking about the competitive landscape, because obviously there's a lot of places you can post reviews. What differentiates you from what's out there now?
So one side, we have a business review platform like Google, Yelp, Bing Review. Those are open source platforms. So anybody can give the reviews, but those review directly goes to the business. And those are not verified reviews. Like even if I didn't get a service from some businesses, then also I can put the 1-star or 5-star comment. So those are like kind of open source. On the other side, we are having a more verified reviews, only people who are directly connected with the businesses, employee, or somebody in the direct touch. They are the only one able to provide the reviews. And the other side, we have professional platform such as a LinkedIn, ZipRecruiter, Meetup, or Indeed. Those allow professional to get a recognition, help them with get a better job, and those are professional to professional platform. Google, those are the business to customer, but our platform is the only platform which allow professional or employee to connect with the customer. So we are professional to customer platform.
Okay. Again, investor, if you have questions, you can raise your hand in chat and I can catch your question. So maybe you would share a little bit more about how you're going to make money. I mean, you talked a little bit about your revenue model, but maybe talk about specifically, how you're going to capture that revenue, what your revenue model is going to be, what kind of margins, et cetera.
So I have a revenue model which I can go in detail, but initially just start with that. If we hire 2 people and go behind the market monthly, we capture the 50 users for B2B, which could be the easy task. But let's think about that first 6 months, we grow up to 100%, 50, 100. And for that, we're going to hire the couple advisor, which going to cost us around $5,000 a month. We're going to hire a 2 in-person full-time team, which going to cost us $10,000 a month. And we can go behind the smaller industry in healthcare, like home care or assisted living facility, and allow them to use our platform. And like as we grow, like if we get up to the next 6 months, go up to the 100% growth, we're gonna, as soon as we're gonna change it to the 2% team to the 6% team. We want to continue to grow from after 6 months, 100% to 50%, but with the 3 times the team. And we can try to get into the little bit larger market, which has an employee count possibly 500, 200 to 500 per business. And even we capture only 2 to 3 new leads every month, then also we'll able to get the more revenue generating by the just capturing 3 to 5 leads and equal to 200 to 500 employees each.
Okay, great. Thanks, Upen. All righty. Well, Upen, thank you for that. And I believe we're going to jump a little bit out of order because I believe one of our presenters is not on the call yet. So we're going to have, let's see, Tim McGraw from Rare Breed. Tim, you there?
I am here.
All righty. Why don't you
Give
throw
me
your
1
slides
second
up?
here.
All right, Tim, I'll count you
Thanks,
down in
man.
just a moment and then look for the 30-second
Hold on, just
warning.
let me make sure my screen's clicking. There we go. All right,
It's
cool.
clicking. All righty. 3, 2, 1, go.
Thanks, Scott. I'm Tim McGraw, founder and CEO of Rare Breed Companies and Rare Breed Health. We're a natural health and athletic performance lifestyle brand that will disrupt the national wellness space by offering premium supplements and safe alternatives to dangerous, addictive black box warning pharmaceuticals. At 272 billion, you can see the natural health, energy, and sports supplement markets are massive, growing even faster post-COVID. And based on recent political developments, we expect that those growth rates to surge due to federal support. While these markets are highly symbiotic with heavy consumer crossover between them, there are no national brands tapping all of them. There is no Rolex or Rolls-Royce of the natural proactive health markets. Rare Breed will fill that void. Regardless of your political affiliation, 3 things are indisputable. Trust in the FDA and Big Pharma has dropped like a rock post-COVID. Second, Trump and RFK fully endorse and support alternatives to pharmaceuticals. And third, the FDA-approved rescheduling of cannabis from Schedule 1 to Schedule 3 is imminent and will remove all regulatory barriers to public markets and stock exchanges, transforming the natural health industries. This historic shift clears the path for Rare Breed to lead the proactive health and fitness movement by building the first nationally respected health and fitness brand tapping into all of these markets I've identified. We achieve this by staying true to our core principles, quality, culture, and science, collaborating with athletes and influencers who share our values, and only producing super premium products that we use daily. Clearly, executing on this mission requires both talent and experience. So let me introduce the team. First, myself. I've been an entrepreneur across a wide range of industries for over 20 years. But in 2012, I founded Revolution Cannabis and planted my flag in the CPG and natural health space by winning 2 of the 21 licenses to cultivate and manufacture cannabis in Illinois, building the largest facilities in the state and gaining a 17% market share. Over the last 13 years since then, I've opened or operated in 11 states and 4 countries, earning recognition in dozens of publications like the New York Times, Forbes, High Times Magazine, who named me the 100 most influential people in cannabis. Our CFO is Matt Spokus. He's a CPA with an MBA from Nepal, has been with me since 2008 across all my companies. Jeff is our CMO. He's a head of brand at Rain Energy at Monster. He took Rain from a concept to a nationally recognized brand, had a $16 million marketing budget, and built an extensive network of athletes and ambassadors. Christina Cole is our CRO. She was most recently the COO of MyPillow under Mike Lindell. She led and launched the mystore.com, growing it up to 15 million in sales without leveraging MyPillow's website or any other their assets. She's an e-commerce legend and has deep connections into big box retail. Our initial product launch included Rare Calm, which is a Xanax replacement, but won't make you lazy or sleepy and doesn't cause blackouts if you happen to have a couple drinks. Rare Focus replaces Adderall, otherwise known as methamphetamine. Won't give you the jitters, but will give you clarity and far better concentration. Rare Sleep replaces melatonin and other tranquilizers, improves sleep quality and REM duration without morning grogginess or brain fog. While we're proud of our flagship products, we are equally excited about rolling out our LFG sports nutrition and energy line, which are hemp-free, thus making them completely unrestricted in big box, grocery, and pharmacies. We're set to launch 12 more SKUs, all hemp-free, within 90 days of closing our Series A. Our marketing plan will hit the most effective strategies, including endorsements, SEO optimization, pay-per-click advertising on Meta and Google, podcast sponsorships, and our own podcasts. Partnerships with mega brands like GNC and the NFL Players Association, and partnerships with elite level athletes like Brian Shaw, the world's strongest man, and UFC Hall of Famer Frankie Edgar. After 18 months of development, nearly 50 different formulations, we launched both wholesale and online sales in June of 24. Feedback from retailers and reviews from customers have been astounding and have confirmed the need to launch our gummy versions of our initial products. Our first 3 products are available now in 47 stores in Illinois and several on the East Coast, and online at rarebreedhealth.com. With adding Jeff and Christina means in 2025, our focus will be launching these additional SKUs and adding big box retail, as well as identifying strategic acquisitions that will add substantial value to Rare Breed, increasing name recognition, and bring us to more major markets. 26 and 27, we will begin looking at opportunities for liquidity events, including IPO and sale to a multinational CPG company. And use of funds, we're raising 1.75. We've raised about 250,000 in friends and family thus far. I have well over $500,000 of my own money at risk currently. And the use of funds is to put fuel in the rocket ship. We have not spent a single penny on any type of marketing or pay-per-click advertising or endorsements, and also to launch these next 12 products, which will greatly increase our ability to get these in big box. That's about it. I can answer any questions you have. Appreciate it.
Yeah, if you have a question, raise your hand in chat. Let's throw it Tim. Tim, go ahead.
Yeah, so you know, with your history in cannabis, what have you found? So I'm not sure if I was clear with these products that you've launched with, if they are kind of cannabis infused, and if so, like, how do you work with kind of the regulatory side of that? That's always been something challenging for us as CPG and kind of consumer investors, is adding that additional risk layer until things become kind of fully nationalized.
Absolutely. Well, we don't need legalization because we're operating under the Farm Bill, and all of our products are less than 0.3% THC. So that we are 50-state legal, but as you're aware, it does affect the capital markets, right? And we expected rescheduling in September of last year, but we all know kind of what happened at the end of that administration. So we are very, very happy about the fact that both Trump and RFK fully endorsed rescheduling. So it's just a matter of time that it comes up on their radar. But in the meantime, that's why we're launching all the rest of these products. Because they don't have any restrictions at all. You know, maybe my timing was a bit off, granted, because I thought that would be done last year. But we have all these products in the hopper, and they have no restrictions. Again, I want to make it clear, we're not a CBD company. We're not even a cannabis company. We're a natural health company. It just so happens that hemp is a very, very effective natural health product. So we're going to focus on our non-hemp products, and then once that rescheduling happens, refocus on the 5-in-1 products, we call them, and look to bring those also into big box alongside our LFG line.
Got it. Yeah, awesome. Thanks. Yeah.
Great. Any other questions for Tim? So Tim, talk a little bit about, you mentioned rescheduling and the market, and obviously you've had some previous success in the space. Talk a little bit more about how, again, Tim began this conversation, but talk more about the current product line and how you're generating revenue and sales from that as you're waiting for rescheduling to go larger from that standpoint.
Yeah, absolutely. We launched the 5-in-1, like I said, in late June, July. We considered it kind of a beta launch because we wanted to make sure the formulas were dialed in. It turns out they were. The reviews have been amazing. The number of people that we've gotten off of Xanax and Adderall is really, really makes you feel good. But the gummies, what we found out is gummies have become a lot more popular than we initially anticipated. So I believe that we can boost those sales substantially by releasing the gummies. But right now, until that rescheduling, we're kind of limited to a pretty narrow band of retail, head shops, vape shops, CBD stores, and the like. So again, that's why we're switching our focus to the LFG, and then we're also doing an essential nutrients line, which will be more daily vitamins and whatnot. But it's not, we're definitely not abandoning it. It's just the delayed our us putting a hammer down on it, until the rescheduling happens. But yeah, we're already selling in stores. Like I said, I think we have 90 total stores, 47 retailers, and then obviously the e-commerce. We just rebuilt our website. We started out with a Magento site. I'm sure some of you have experienced the Magento build. They're not fun. We switched over to Shopify, and now we just relaunched that site today. So we're actually going to start spending money on pay-per-click advertising. So our e-commerce should take off here pretty quick. But again, we need to do it right. Obviously, it takes a real budget and not just kind of doing it out of my pocket, which is essentially what's happening today.
Again, investor, if you have a question, raise your hand and I'll call on you. Tim, there's been a lot of talk lately about generationally, the reduction in alcohol consumption versus other alternatives. Are you seeing a similar trend in, the healthcare, the supplement versus pharmaceutical space generationally?
What I'm seeing, I mean, obviously there's, cannabis and hemp, and that is all far safer than alcohol. So anytime you give somebody an alternative to alcohol, you're in a good spot. But we just see in general the move towards proactive health, whether it's meditation, working out, fitness. People just do not trust the FDA and big pharma like they used to when I was a kid, or since COVID, since the 2020 roughly, you've seen a huge drop off, as you can see on that chart. And people want alternatives. People want safer and effective alternatives instead of black box warning drugs. So that's why we launched the 5-in-1, because they're really the most therapeutic of our SKUs. And we really want to, that's a big part of our mission, is to get people off of dangerous drugs. But at the same time, we want to be a health and nutrition company, not specifically a hemp company. So I think the LFG line is, I could talk more about it offline if you want, but we've spent a lot of time formulating that. And we have a lot of pro athletes really excited about endorsing that line because we're kind of doing things differently, like we do with all of our other products. So I guess that my answer is there's just a general move towards more proactive and natural health that's only increasing, I feel like. So I think it's a perfect timing for this industry with RFK sitting at the head of HHS.
Right. And, obviously this announced, I think, today or yesterday, the removal of, certain food colorings and additives in the food. So, it's a positive trend. Thanks for that, Tim.
Awesome.
So next up, we're going to go with Tom Albert from MeasuredRisk. Tom, are you there?
I'm here. How are you, Scott?
Awesome. Well, let's do this. I'm going to hit my timer in just a moment. Bear with me. And I know you've got some interesting breaking news, and hopefully I won't kill your thunder, but I'll let you do that. So you'll get a 30-second warning in chat, but I'll count you down. 3, 2, 1, go.
Awesome. All right. Thank you, guys. Appreciate it. Brian Neer, it's good to see you out there. A few others. Let's go ahead and get into this. So my name is Tom Albert. I'm the founder and CEO of a company called MeasuredRisk. We're focused in supply chain risk intelligence, which is a huge issue these days at not only the boardroom, but the large enterprises around the world. If you look at what most organization executives are saying, they've been basically saying, hey, supply chain risk, the lack of visibility is a huge issue, and being able to action that lack of visibility. So when you think about moving targets, like let's say tariffs and everything else that are impacting the world, that has an impact on the decisions organizations make, where they determine that they're going to source or procure to build out that supply chain. And so it's really a moving target, and there's a lot of risk. And the biggest issues in this space are a lack of visibility to the various different risk archetypes. And there are also specific mandates out there. So much so, this is to Scott's news, we recently were awarded a strategic role on a $920 million GSA Scripps blanket purchase agreement. Scripps stands for Supply Chain Risk Illumination Tools. And I was just able to announce this just 2 weeks ago, but it's all it's government-wide, and it's sponsored by the Undersecretary of Sustainment and I believe Defense within the Defense Department. And the purpose for this is to ensure a whole bunch of different things about the supply chain. Make sure that organizations aren't easily hacked or breached, that there's resilience built into the supply chain and the critical infrastructure associated. And so we recently were able to announce this is just really what we built the technology for. So we're super excited, and we're really building around right now how to execute into this in a meaningful way. It follows some very serious executive orders that came out, and we can talk more about it shortly. The problems that we're solving are historically the tech in this space really uses stagnant data archetypes. There's really very little context associated with when you're trying to profile a supplier from a distance. This would just be like doing diligence on a company, for instance. If it's a company that's 50 people and below, like the bulk of the supply chain, you don't have a lot of intelligence about that entity, and open source intelligence is a challenge. And there's really a lack of foresight, nothing predictive in the market that tells you which way that supplier is likely to go. Is it likely to go out of business? Is it likely to be breached? Is there any kind of foreign ownership, influence, or control in that business? Those types of things. The market for this space is a $56 billion TAM. We plan to capture 289 million of that over 5 years. We think that's really achievable, especially from where we sit right now. We're raising, just so you guys know, we're raising 500K. We just got commitment yesterday on 250K of that. So we're looking to plug the gap on another 250K. We think that it's it's a $1 billion business. If you look at some of the revenue multiples in the space, the data intelligence space is averaging around 25x from an exit perspective on the revenue side. We think that, with our trajectory where we sit today, that we're going to surpass a $50 million revenue mark, but we can see that it's a company that could be a $1 billion company, and our competitors in this space already are $1 billion companies as well. What's really interesting is the way we've built this technology out. We built it in such a way that kind of gives us what I consider a competitive IP moat. And, we do that through a couple different really unique artificial intelligence models that we've developed with PhDs in AI, NATO secret cleared PhDs in AI, that give an organization greater visibility around those attributes that I was describing. And this gives you a little bit more detail as to what that looks like for an organization. They have the ability to very quickly report on the data. They're able to look at the entire supply chain. Our ICP is typically the CISO or the third-party risk management team or the SCRM team, somebody in there, or even procurement. These are all things that organizations have to look at today prior to actually executing strategically with a supplier. And from our go-to-market perspective, there's a huge direct sales opportunity. We have a methodology around that. There's a huge distribution approach as well through platform OEMs and even the big four consulting firms and the data marketplaces. We deliver it via SaaS, API, and services. And we're actually putting our whole effort this last couple of weeks around what's called capture, which is try to get as much of that government expenditure as we possibly can. What makes us really incredible is that we don't need to have prior knowledge of a supplier. It's inference. We use inference, so it's immediate and predictive risk intelligence. And then the team is phenomenal. You've got a team of serial entrepreneurs, several exited advisors on the team, guys like Dave Peterson, who just exited to Nokia, Scott Hamburger as well, just exited recently. And Jamie Marasini's a 5-time, actually, I think a 6-time serial entrepreneur at this point. Really solid backgrounds of these folks. We think that the 500K gets us a year out. And like I said, we've got 250 of that spoken for today. We've got 2.3 million invested into the company. This is the use of proceeds. And I appreciate your time, Scott, and everybody else.
Great. Tom, thanks for that. And investors have questions. I'll get you into a second. I don't want to kill your thunder, but
yeah.
I mean, supply chain and tariffs. There's got to be a really strong correlation between the two. So talk about how the tariffs that are potentially out there, how that's going to affect the supply chain and how you can benefit from it.
Killer question. I actually had an investor the other day reach out to me and say, hey, can you modify some of your code base to include it around tariff assertion? He called it the Trump algorithm is what he said. But the point being is would we be able to modify our existing code base to support that? So I reached out to our development team. The answer is yes. So there's cost associated with it, obviously. But the point being is our existing foundation is there to do it. How it impacts it, Scott, is that if you, for instance, let's say you have shifting sand in your supply chain and you've got, a global supply chain of 400,000 suppliers, like one of the organizations we're working with, 400,000 suppliers. Where you're sourcing from those suppliers is really important at this point, more so than ever before, because of the tariff, specifically from an economic perspective. That goes beyond things like cybersecurity. It goes beyond things like just resilience, whether that supplier is going to go out of business. The economic side of it is really where that impacts. And I think that everybody in every industry is very concerned about that right now. The beauty is we already have a platform that we can actually use the existing code base to modify, to adjust, to create what I consider a feature to support that.
Fantastic. Mark, go ahead. You got a question?
Yeah, sure. Can you go back to the TAM slide? I'd like to understand that a little bit more.
Yeah, sure. No problem. Let me pull it up. Okay. Right here.
Yeah. So can you explain to me how you get to the 56 billion?
Yep. Yeah. So if you look at the supply chain management market overall, it's a $56 billion TAM projected out, I think, to 5 years. And I think the early was it was through 2028. You'll see different reports on what that TAM is, but ultimately you've got a supply chain risk management TAM. Let's call it anywhere from 40 to 60 billion is what I've seen in the numbers. And then I've also seen the third-party risk management space, which we also play in, and the decision intelligence space, decision augmentation space. All three of those we actually play in.
So I think my advice here would be do a bottoms up TAM. Like this kind of top down, driven by industry reports and analysis, kind of encompassing everything like supply chain management software is such a wide, area. What is your really sort of bottoms up TAM, which is, the simplest form of that is number of paying customers times how much they would pay. And that's really, I mean, as a VC, that's really what we focus on. When you bring in those really huge numbers on this overarching industry, which is not something that you can fully own. Like you can't own $56 billion of revenue here. You're not the supply chain management software. I think that makes it harder for us to understand the size of the opportunity. So that would be my advice. Do a bottoms up TAM that's thoughtful in terms of how much they would pay, how many customers are out there, segment the customers, and I think that would be easier for us to understand.
Yeah, that makes sense. Really good advice, Edmar. I appreciate it. And what I would say is just in this space alone, I mean, if you look at our competitors, there's some household names. So there's a company called Interos, which they've taken in 400 million, I think, through Venrock. And then there's another company called Exeger, which $1.3 billion buyout, like 60% buyout by Insight Venture Partners and Carlyle Group. So it's to your point, I think that maybe a bottom up approach and even kind of a competitive analysis in that respect with the other.
No, those two examples that you gave there, because I think you want to squash any objection on how big this can get. So having those comps that you just mentioned is not a bad idea, potentially as part of your time slide, or maybe a competitive landscape of like, hey, look at this company. They got sold for $1 billion and we're actually 10x better than them.
Yeah, exactly. Yeah, I love it. Yep. Thank you.
Great. Thanks, Edmar. Any other questions from our panelists? We'll take one or two more. All righty. Thank you. Thank you for that, Tom. All righty. We're going to pivot a little bit. Next up, we've got Jordan from mOOm World. Jordan, are you there?
I'm here. How's everybody doing? How are you, Scott?
We're doing great. All right. So look for the 30-second warning in chat. I'll count you down now. 3, 2, 1, go.
All right, I'm sharing my screen, so here we go. So my name is Jordan Freda, and I have a company called mOOm World that I am stating is a new model for mobile gaming as well as entertainment. The company's seeking $500,000 at a $4.5 million pre-money valuation. And I'll get into what it is because it's definitely different from anything you're seeing here today. But first, I'm just going to give a quick background on myself. I've been an entrepreneur that's been working in entertainment and brand building for the past 15 years. My first company was a CGI, special effects and production company that I took to 120 people when I was 22 years old. And I've worked on and executive produced on some of the biggest movies in the world, like The Avengers, Captain America, Harry Potter. So I've been, deeply involved in visual identity and brands for a long time. I exited that company, started another company that was a brand growth agency that focused on building emerging e-commerce brands, usually taking businesses from $1 million to 5, 10, 15, and $20 million as sort of our forte, doing everything for brands. So when I came up with this crazy idea that you're looking at right now called mOOm World, it was an amalgamation of all of my skills and my team's skills from the past 15 years. And I looked at the mobile gaming industry as well as the e-commerce industry and was like, how can I bring these things together? So welcome to mOOm World. What mOOm World is it is a cyberpunk themed video game world that blends fashion, community, and music and e-commerce. And it's based on a popular webcomic that I created called mOOm World, which I'll explain a little bit later. But our goal at mOOm World is to merge the virtual and physical world into a creative community where people feel like they're a part of it and are behaving both digitally and physically in the real world. So we are creating popular culture in all forms: gaming, comic, music, street art, fashion, and entertainment. mOOm himself, which you can see there behind the DJ deck, is a shipping container alien. I know that sounds weird, but in our video game world, people actually build and decorate their own shipping container homes that are chat servers and places for self-expression and places for people to hang out. The actual beta of our game is live, and we've got really good a really good demand for it, and we've started to prove out product market fit. So I'm going to quickly just explain what you can do in the game, and then we'll get on to the rest. So inside of mOOm World, what do? You start by building and customizing your own shipping container home. The core game loop is you build a cool home, you level up into different size shipping container homes, and there are decorating contests that you can participate in. You can customize the music, the mood lighting, everything. You can hang out there, you can chat with your voice, and you can chat with text. You also can customize your own character, build out your own avatar, and then we have a bunch of mini games on a public open map where thousands of people can play together, and they can play fun little mini games that level up and help you achieve more within your shipping container home. So that's a high level rundown of what the game is. I know it sounds a little bit crazy, but you can kind of think of it as something that is colliding with, something like Roblox, for example. We see it as a high growth opportunity, and I've strategically placed the business in between two markets, which is essentially casual mobile gaming, which has a $91 billion TAM, and collectible toys and fashion, which is a $105 billion TAM. And the way I think about mOOm World is it's not just a mobile game and a video game, and this is kind of some of our secret sauce. I think of it as a new way to convert customers as if it was an e-commerce platform, because we have this mobile video game and we have this platform that we can bring people into, and we sell them physical and digital products. Like this crazy hoodie I'm wearing right now, if you purchase this product in our game for your avatar, it also shows up for you in real life. And this is all happening at the moment. So we're taking the best part of e-commerce and the best way to market and bring people in through e-commerce and bringing it to mobile gaming. Where cost per clicks average $3.50 in e-com for fashion products, we can bring users into our environment for much less and convert them and keep them playing and keep them sticky and build this community. So let me keep moving here. We've got a solid foundation. I launched the actual beta of the game last September at Tokyo Game Show, the largest gaming convention in the world, attracting over 1,800 users organically. And one of the things that I've positioned ourselves really uniquely is that the vision started as a webcomic, a story I created as a comic. You can also see I have a physical version of it in my hand. But our comic is distributed on North America's largest distribution platform that has 2 million plus monthly readers. And we have 200,000 readers of our comic and an exclusive contract to get the readers of the comic to install our game through a unique marketing mechanism, which allows us to do it organically without having to pay for that. We did $240,000 in early adopter membership sales within our first test that we deployed. So we know that we have a fan base that we've built, that we've earned their trust, and they're willing to spend. We also have tested our physical and digital products and have sold over 200 physical products priced at $75 to $165. And we've accumulated over 75,000 hours of test gameplay, with the top 50 players spending over an hour a day within our world and our system. We've built out.
So, Joe, let's do this. Let's jump into some Q&A. If you have a question, raise your hand. I'm going to ask a very obvious question. Minecraft is, what, the third or second most, highest revenue movie in its model now. I mean, talk about kind of the long-term landscape and how you can use. Obviously, Minecraft started out as a game, and now it's a major brand and a major movie. Maybe talk about a little bit about the runway and the potential, from that standpoint.
Yeah, thanks, Scott. Absolutely. I mean, the way I see it is the actual mobile gaming space as a whole is ripe to be disrupted by original IP. All of the intellectual property that we've created, from our designs to our code for the game, is all original. And I see the ability to navigate within that space, because 40% of all of the top 100 mobile games started as an original studio with an original IP. So I know that we can get involved there. And this is what this is what the youth is looking for. You can see that with this slide in front of me that we've got proof of concept. We've got people that love what we do and are buying into it. But if you ask anyone that's a teenager what they want for their birthday, the answer is pretty simple. It's usually a digital currency. It's usually Fortnite, Roblox, Minecraft, etc. And I would place a 9 out of 10 bet on that if you're asking anybody from the age of, let's say, probably like 9 years old to almost probably 30 years old at this point. So I know that the space is ripe for disruption, and that I can build a property that far exceeds just the mobile gaming environment.
Great, thank you. Ed, you got a question? Yeah,
Jordan, I have a question for you. What's the actual game? I mean, is this really a game, or is it just kind of a cyber world? Do you have to, is it kind of like a Minecraft where you go collect things and have to, avoid hazards and whatever? Or is this a place that you actually just kind of like a cyber world where you just meet others?
It's actually both. So we're refining our core game loop right now, which is building shipping container homes. So you can actually build your own container home and decorate your own container home. and then you play mini games within the open cyber world that feed into the economy that makes you a better decorator within the game and makes you a better builder. So you can kind of think of like, if we equate it to like the Sims of old or something, right? But the ability to build and customize your space is the core game loop. And then we have mini games all throughout the open world that are fun little things that are pretty simple for anyone to play. And that's part of my thesis too, which is like, there are plenty of advanced video games, but actually, you know, a casual space where it's like 2 buttons to do something is really where I see a lot of potential, especially when you start blurring the lines between fashion and culture.
Yeah, I mean, why I was wondering is I'm wondering what, other than just kind of having the gratification of setting up your own world, what's the hook that keeps people coming back, you know? And I guess if there's a game, that's typically why people come back.
Yeah, that would be why people come back, is because they're going to try to build the next big shipping container home, customize their space. And then there's just fun casual things to do on the map. Like we have a football game, we have a graffiti game where you go and you do graffiti and you cover up other people's clans and logos, and just, you know, fun, I'll use the word mindless, but fun, simple things for people to do that then make them better decorators. Yeah, I know it sounds kind of silly, it sounds kind of crazy, but there's like, you know, entire industry built off of just that.
Yeah, thanks.
Yeah,
Thanks.
you're
It's
welcome.
interesting. It's just what you say that, Tim. I'll take your question in a second. I hope I don't clear your thunder. But you know, I just saw a commercial for McDonald's the other day where they are now, you can have your own McDonald's characters, you know, in I believe it's Minecraft.
Oh, that's
And so
cool.
obviously you brands are using this as an opportunity to capture, you know, passive minds and poor eating choices. So
Yeah.
but Tim, go ahead. You got a question?
Yeah, I mean, I may have missed it. I apologize if I did. Had a quick call I had to jump on, but what's kind of go to market? You know, how does this get in front of millions of people eventually? What's your thoughts there? I mean, you're already talking about CAC, so you have some kind of, you know, paid ads or something moving, but what's the
Yes.
best way to get this out there?
So one of the things that I did early on was I got a distribution deal with the largest distributor of webcomics in North America. And within that, and we created this original comic. I think you can probably see it. I'm holding it right here. And what they have 3 million plus monthly active readers, and we have 200,000 readers of our comic that releases every month. And within the contract, one of the things that none of their other IPs on the platform, which they have huge IPs on the platform, we have the ability to inject actual call to actions to install our game. And we're kind of merging the game and the comic so that there's crossover between the two things, so that we have like a target audience that's ready to go into our game through that. And then we've also built an original sort of like, let's call it an affiliate program, but it's a really cool way that takes active players and then rewards them. And it's a rewards dashboard that they can be rewarded with in-game stuff and physical stuff based on how many people they invite and how they participate in that ecosystem. So we spent a couple of months there developing that, and I haven't seen any other game that's ever done that.
Yeah, it's really smart.
And then plus obviously paid ads and all the normal stuff, right?
Yeah, sure.
Yeah.
Awesome.
Got it.
Thanks, Tim. Any other questions for Jordan? All right, we've got one more presentation.
Thank you, guys.
And then we're going to have a short conversation with our friends at Justworks. So Bob Frady, you there?
I am.
Awesome. Welcome back. So you can share your screen. That would be great.
Okay.
Get your slides up.
Let me do one thing here.
Tom.
Get to the right. Got to get to the right screen. Always a challenge.
I haven't got to the point where I can handle more than one screen. I'm just not that technically savvy. And more than 5 tabs makes me dizzy. So I don't know how some of you guys do it. So awesome. All right, Bob, you got 5 minutes. Look for a 30-second warning in chat. 3,
Okay.
2, 1, go.
I'll try to be brief. My name is Bob Frady. I'm the CEO and co-founder of PropertyLens. The easiest way to think about us is as a Carfax for houses plus. Here's what we're challenging. Home buyers are expressing pain. 82% of home buyers have regrets about their recent purchases, and 42% wish they had done more research before they bought their house. We see that home buyers already spend about $33 billion a year in post-purchase unexpected expenses. And due to inflation and climate change, we're in the early stages of an insurance crisis where people are having trouble getting houses insured because of things like the age of the roof. We've built a company before. We are second-time founders, John and I. We built a company called Hazard Hub that was a risk data platform. We had over 150 customers and sold it to Guidewire in 2021. They tell you not to do anything rash after you sell your company. And we decided to buy houses. And we were looking for something like this, and it didn't exist. So we built it. PropertyLens, we want to be the most valuable resource in home buying. We provide a ton of insight to houses, including a curated list of questions to ask the seller before you make an offer on a house. Think of it as a pregame analysis. When you walk in the door, you come prepared with information about that specific property. Things like insurability factors, like roof condition, flood zone determination, risk and hazard score, hundreds of data points, most of which are not publicly available. Our process is we do two things. We build a lot of data, which is an art form in itself. And then we buy some data, or we partner for other sorts of data that we can't build ourselves. We pull them all together. We've got 40 different data providers. We've got 101 different elements across 1,000 different fields. We run them all through AI and a rule set to come up with questions. This is a property in Minnesota. 4 winds over 65 miles an hour from June 28th of 2020 to August 26th of 24. That's a prompt to ask questions about the condition of the roof. Is there any sign of damage? Is this a lot? Is this a little? There are a bunch of construction permits that were pulled for this location, which indicates a renovation. There's 2 sex offenders within a half a mile of this property, something you don't want to find out after you make an offer on the property. The roof's in good condition. It's about 5 years old, 16 years left on a 21-year lifespan. So designed to give you questions to ask. RoofLens is a subset because all the data that we have is also available for purchase by commercial entities. And RoofLens will tell you things like, how old is this roof? What's it made of? What's the lifespan? What's the expected replacement cost? What condition is it in? And what sort of risk is it exposed to? The next stage for us is to estimate 2-year expenditures on the house, which will launch next month. We want then for users to be able to update data inside of the application, because right now, when you rely on third-party data, sometimes that data is just not correct. So we want users to be able to update that. We're establishing a lead gen marketplace for insurance and solar and inspection and services. And eventually, what we want to have is a tool where you walk around with your phone and you do a self-inspection before the inspector hits your property, and we tell you what we see from that location. Here's our vision. Checking a PropertyLens report should be, you wouldn't buy a used car without a Carfax report. You shouldn't buy a used house without a PropertyLens report. There are 4 million home sales in 2024. People look at an average of 10, which is at $50 a report. It's about a $2 billion TAM. Our target is to be a $100 million revenue business. So far, we launched our MVP in October. We're now up to 1,000 reports to consumers. We have more than 6,000 visitors per week to our website. We do have a B2B process where we sell bulk data to users, and now we are actually at 335K in annualized revenue. We expect to be about 700K by the end of the year. We've raised pre-seed money because we know that this is a race to a certain extent. Once you lay down the path, there will be people who want to follow it. So we raised the pre-seed money to get the product off the ground, and now we're raising another round of $4 million. There is not a price on that round yet. That will be up to the lead investor. We know that we need some help in marketing and some help in getting more and more customers on board. So we're going to invest in sales and marketing. Product development and operations are the expenditure points. Listen, it's very simple. The home that you love shouldn't break your heart because of unexpected expenses. We want you to know the truth. We're PropertyLens.
Fantastic. Thanks, Bob. Appreciate that. If our investors have questions, you can raise your hand in chat. Bob's happy to answer those. Bob, you mentioned obviously the direct consumer play. I mean, who are your potential strategic partners? Who are the key people that are going to integrate or complement or supplement what you're doing?
There's 2 types. There's data providers who integrate with us, and then there are potential exit points for us. Did you want to know the data partners to integrate or the potential exit points?
Let's talk about both.
The potential data partners are aerial imagery partners, which we partner with right now, permit data providers, which we've helped build in the past, but we partner with. Replacement costs. A lot of times when you buy a house, especially if it's older, it costs more to replace it than you're paying for it. And most people don't know that. And then insurance providers to give us data that we can then put into the report. On an outbound standpoint, I don't understand why any real estate portal wouldn't want to have this on every single property in their portfolio. So it could be to one of them, it could be to a direct to consumer play, and they want to have another line of business like an Experian or something like that. And then of course, anyone who wants to build data for homeowners is what we think are exit points.
Any questions from our Mr. panelists? It's interesting, Bob. I live here in Florida, and we suffered through 2 hurricanes, last year. And what happened in the neighborhood I used to live in, Treasure Island, these houses were completely torn apart, and they were given an option: tear it down or raise it up.
Raise it up. Yep.
How could your tool help those kind of people either before, during, or after a consequence like this?
Well, if you already own the home, then that's not really our sweet spot. It's when you come down to selling the home. That is where our data can be very helpful, because we're introducing, when we start to talk about changing the data, we'll introduce a homeowner portal. So if you've put the work into improving the property, you want to show that off when you go to sell that house. So that is a really terrible situation to be in. But you want to make sure that you document everything and then show that off as part of the next listing that you do on the house, because right now the market's stagnating a little bit.
Mm-hmm. So, and again, questions, you're more than welcome to jump in and raise your hand in chat. I'll call on you. Last time around, well, I'm going to shut up for a second. I'll let Tim ask this question. Go ahead, Tim.
Yeah, I think I just got to ask the same question. Help us just get clarity on, how does this reach the homeowners? How do people learn and hear about this so that they can engage with the company?
The reason why I was late, because I was doing a real estate podcast just before
awesome.
I jumped on here. So there's a lot. It's ground and pound. You use the socials, you use the influencers, you reach the podcasters, you reach the people who influence the space. It's a grind. It's a grind to do it that way, but it's really the only way to do it with any substance long term. The second is you got to get on. We test everything all the time. And the next step is to get ubiquitous and to get on TV, get on front of people and start testing out that particular media to see if it works. Because we haven't tested it. We haven't had the money to test really intensive types of local advertising like that. That's one of the things we want to tackle. But right now it's the socials, it's the influencers, it's the podcasters. That's where we are.
It's great.
Awesome. Thanks, Tim. Ed, you got a question?
Yeah, I 2 questions. Have you got any feedback from banks and from realtors yet?
Yeah,
I'm just interested. You're talking about, having to pound the flesh to get the customers.
Yep.
The first thought to me is, you've got these 2 channels that actually already have direct routes to customers. So have you given any thought to that, and maybe a white label approach, and just kind of what feedback have you got from these folks?
The feedback that we've gotten from realtors is they don't want anything that stands in the way of the deal getting done. So they're a little reluctant to release some of this data, because their job isn't to build a disclosure for a property. Their job is just to reflect what the owner wants to say. So they have a little bit of a cross odds where they don't want to interfere with their commission. It's not their job to expose all this stuff. That's the homeowner's job.
There's also buyer's agents as well.
So the buyer agents are just different on the other hand altogether, because they're like, I absolutely want to know this walking in the door. And that's a market that we're reaching slowly. It is again, it's grounded pound with those folks. And from a bank standpoint, we haven't had a lot of exposures to banks just yet. We've really focused on the consumer market And now we're starting to expand our focus a bit into those other.
Yeah, it just seems that banks are very antiquated with their, they've got appraisers, they've had relationships for a while, and that seems like an expensive, antiquated process. And I know it's tough to supplant, appraisers who have already been part of the process for a long time. Banks don't like to change things, but if you could, that it might be worth a look.
Well, one of the things we want to do long term is as we build the ability for people to change the data inside of the report to reflect, they'll upload a receipt or something to help us keep that data current. The next piece of the market is the inspection market itself. Because right now, if you get an inspection on a house, it usually comes as a referral from your realtor. And that's the worst person to refer them. We want to be able to push a button and say, use a PropertyLens inspector. We'll preload their inspection report with all of our data. So they'll know exactly what to look for beyond what they normally look for in a house. That's next year. That's a big step.
Sounds like you got your hands full.
Yeah. Yeah. There's a lot of ways to go, and focusing is always important.
For sure.
Thanks,
Bob.
Miriam, you got a question? Go ahead, Miriam.
Yeah, and sorry if I missed this already, Bob, but to your point about needing to stay focused, where are you, what are sort of your initial target consumers? Are you looking at by geography, by sort of pricing band of a home? How are you kind of honing in initially on your audience?
So initially, we, in some of the social platforms, because this falls under housing, you can't do demographic based targeting. So what we have to do is put it out there around interest, which is real estate or new homes, and then see what the demographics look like on the back end. And surprisingly, or not surprisingly, it's middle age to older customers, 100K incomes plus, have bought homes before. And usually, because everyone thinks this is a first-time homeowner product, but they don't know what they don't know. But if you've bought a house and then had to repair the boiler or the heater after 6 months and then was never disclosed, you're much more likely to purchase from us. So it is a slightly older demographic so far, but that might be a function of how we've advertised. We don't know everything just yet, but we keep trying to measure it. That's for sure. And it's not necessarily the $2 million plus house, although there's certainly value there. It is more in the probably 700,000 to million range where we have the strongest. But also on the ends, there's some activity as well.
Thank you.
Awesome. Any other questions for Bob? I'm not gonna ask this question, but I'm gonna post something really interesting in chat because I saw a commercial the other day. One of the folks in chat talked about, trying to figure out potential electrical and plumbing and other problems. And there was a commercial for Progressive Insurance where, someone just bought a house and there's this whole line of things that they got that could go wrong. So how can this play into things like this person posted about, things that are been repurchased in the house or been installed in the house?
The answer comes down to there's two places where that information hides. The first is in building permits. So if they're getting a building permit for that location, and in Florida, you have to get a building permit to leave your house sometimes. We'll record that data and mine that data for when different systems have been replaced. The second is in the real estate description, because a lot of times you don't want to tell the assessor that you've added 1,500 square feet under your house, but you want it as part of the sale because you get more money for the house. So in that listing, you tend to show what you've done to the house to improve it. So we mine all of that data to come up with an estimate of when systems have been replaced. And there's always going to be times when you miss it. And that's just the nature of the beast. We keep trying to gather more and more data to try to find out exactly what happened and when. But those are two pretty good jumping off points for starting.
Fantastic. Thanks, Bob, for that. So, and that wraps up our company presentations today. In a few minutes, I'm going to ask our investors to give us some feedback. So be ready. It's going to be your turn. I'm going to call on you. I want to get some feedback on the presentations, and then we'll open up to some Q&A from our attendees to you directly. But before I do that, in the beginning, I mentioned about a bunch of startup tools and resources that I offer for our network and our community of entrepreneurs. And And one of them is our partners at Justworks. And I wanted Nick to spend a few minutes, talk about Justworks, and then talk about the opportunity we have for them. So Nick, you there?
I am. How are we doing, everyone? Before we jump into that, I think, Tim, you might have had a question for Bob. Is that right?
I think
I actually did. I didn't know how to raise my hand, but Bob, maybe I missed it. But I feel like there's a natural tie-in here with home warranty companies.
Yes.
Did you mention?
Yeah.
I mean, but I guess the complication when you wouldn't want to give them the data because that would affect rates, right? But some way to collaborate with home warranty companies and get some type of commission, I would figure would be a great play.
Yeah, there's a number of different endpoints for that. The first is insurance. Like in our report, you can push a button to get an insurance quote. Now, it's not as good as we want because we do want to pass all the data in that instance, but they still want you to walk through their process.
Right.
But there's solar, there's handyman work, there is inspections, and there are home warranties as well. And we've had discussions with a couple of.
So Bob and Tim, I appreciate the feedback, and Nick, thank you for co-hosting temporarily. What I'd like to do is get to the getting. And keep in mind, we'll have all this information, opportunity to get more information for all our presenters post-event. So Nick, you've got the helm.
Thank you so much. Thank you, everyone, for your time today. My name is Nick. I'm one of the partnership managers here at Justworks. As it says there, I support our capital markets function. What does that mean? That means I support our VC and PE partnerships and hopefully some of your portfolios as we get to know each other. So what does Justworks do? Well, we're here to help small businesses run with confidence. We have a easy-to-use HR platform that has 24/7 customer success behind it. And we are what you would know as a PEO, or a professional employer organization. A little bit about Justworks. For the porcos in the room, or for the folks raising capital in the room, we were like you at one point. We raised our first $1 million 15 years ago. We've since raised $143 million over 5 seed rounds. So we get what you're going through. For the VCs in the room, we also got your portfolio in mind when we're doing this, right? We want to make sure that we're SOC 1, SOC 2, and now recently SOC 3 compliant. We have a net promoter score of over 60, so people like us. They tend to stay with us for a pretty long time. We have 12,000 businesses on our platform today, represents about 175,000 employees for Justworks. And that means we are the largest consumer of benefits through Aetna. So we get you access to some pretty amazing plans. Where our sweet spot really falls in the 5 to 100, that doesn't mean we don't flex down. We support the single founder all the way up to businesses that are 500 people. The folks that need us the most usually is the 5 to 100 crowd. Normally, average size company for us ends up being about 17, and most companies, like I said earlier, they stay with us for a while, 7 years. We have 98% year-over-year retention when you're talking through our referral channels, like myself. So really, what that comes down to is people are happy, right? When they come to us, they don't have a need to go and look and re-eval every single year because their benefits costs are jumping like crazy, or because they're not getting the support they need. We do the due diligence up front in year 1, so year 2, it doesn't scare you away, to be honest. We have 3 different products. To work with Justworks in any capacity, we need to pay your people. So that's why payroll is there first. Really simple, easy to use. If you're using Gusto today, think of this as a Gusto parity, except now we have a lot more options for you. Where Gusto ends at payroll, we now have the options for when you are expanding into multi-state, when you're expanding internationally, Justworks can support you. From a PEO perspective, that's where we cut our teeth. That's where we started. A PEO, or a professional employer organization, think of it as business in a box, right? We do your payroll. We have a HR person there to help you. We do your employee benefits, which are top notch. You're going to see benefits that are like Apple and Google. And then the important thing is we're going to keep your portfolio and your companies out of hot water with compliance. You don't know what you don't know. So you go and hire that person in Utah, and guess what? You forgot to set up state registration in Utah. Utah fines you $75,000, and they're going to fine you every 90 days until you fix that and get it done properly. A company like Justworks ensures that never happens. For the VCs in the room, we protect your investment. We're going to make sure that these little things don't pop up and they're not churning through revenue on their burn rate as fast as possible. I will touch on international hiring here for a second. EOR, international hiring, is the hottest thing in HR tech or HR these days. People want access to the best talent wherever they are, right? This is not going to save you money. If you think that you're going to go hire a team in India and EOR is going to save you money, it's not. It's just going to get you access to the best people in the world, right? And sometimes a little bit easier way to do it than setting up an entity in said country, which is a lot of time, a lot of money, a lot of effort. We already have the entity. Let us do it for you. Some of the people we partner with, we feel like these are the folks that are best in class when it comes to HR. So we are not like some of our competitors that have a tie-in to absolutely everything. We feel like small businesses need a pretty defined list of who we think are the best. We use Carta in-house, we use Brex in-house, we use Electric in-house. We can confidently say like, hey, we use them, you should take a look at them, right? A lot like our VC partners that we work with today, they use us as a PEO, in turn their portfolios use us as a PEO. So with that, I would love to continue having this conversation. That's my email, ncontrino@justworks.com. Because Black Dog, you actually get access to a pretty great deal with Justworks as well. Think about 30% rebate coming back to you. So if HR employee benefits are on the docket, or you're looking to eval as you're coming into this next year, I can tell you that everybody's costs are up this year and ours are looking pretty good. So if you're looking at ADP, TriNet, or one of our competitors, we'd love to have a conversation. I think we can do some really great things together. Thanks, Scott.
Fantastic. Thanks, Nick, for that. So yeah, we just recently set up a partnership with them and hosted a great event up in New York City. If any of you are interested, you can reach out to me via email. We actually have now a special link that has that discounted benefit, so I will send that to everybody post-event. But Nick, thank you for being part of our event today, and look to a follow-up. So again, I want to thank all the presenting companies and for being on it. It's not easy doing this, and it took a lot of guts, a lot of courage, and I want to appreciate that. So what I like to do now is I like to get some feedback from our investor panelists. You got to ask some questions. Now I want to hear some feedback. What did you like? What could be improved? Who did you like? And so I'm going to go around the room, and I'm just going to call on people who are on my screen, and then what we do after that, we'll open up to some Q&A from our attendees. So Ed, you're on my screen right now. So why don't you start? Why don't you share a bit about what you like and some feedback to the presenting companies today?
Sure. Great job by everybody. It's not easy to do a 5-minute pitch and really tell people what you do in 5 minutes. And I walked away kind of understanding exactly what every company does. The ones that I liked a little better, well, the last one I actually thought was one of the better ones, the PropertyLens. I thought that was, being a person that buys and sells houses probably more than I should. It's one of those things that I understand that it'd be nice to have an X-ray when you go in buying. It'd save a lot of time and a lot of money. And I thought that was well presented. That was probably my favorite one. Hook Security also did a great job. Something that's, and I can see where the company's going and how it fit. We invested in a couple of companies very similar to this one. And we found that after you grow them to a certain scale, they get attractive to the next kind of somebody who's consolidating. So I understand that business and could understand where that one's going as well. So those are the two that really stuck out to me but I thought overall, great job, guys. Everybody did a great job presenting.
Fantastic. Thanks, Ed. Itamar, this is your first time on. I'd love to get your feedback on what you heard today and some recommendations.
Yeah, sure. So I can be super positive and hype a lot of good stuff, but I don't think that's helpful for founders.
No,
so I'll
it's not.
give you a Silicon Valley lens and what I believe here is fundable with, again, a Silicon Valley mindset, which is primarily driven by, can we find a company that's going to be a multi-billion-dollar company that really becomes a one-winner-take-it-all, or kind of a significant leader in its space, and kind of gets you to 100x or more in like investment return, right? Which is a very extreme view of the world, but that's really what I represent. So first one, Hook Security does not feel venture scale. There's no moat. There are a lot of companies like this. If I want to start the X+1 company that does this tomorrow, I'll be able to do that. There's no barrier of entry, and there is no stickiness beyond, okay, they like this product and they want to try it. So I think that it's not easy to make that fall into a venture VC backed kind of with that mindset. I think that's a little bit hard. Rare Breed is another one that's a little bit harder. It's kind of retail product. It's like 99% of VCs won't do it. You have to remember that the reasons VCs in Silicon Valley at least pursue these type of businesses, software businesses, is because the marginal cost of servicing one more user trends to zero. And that's not what you're going to see when there's hardware retail, products, when there's manufacturing, when there's supply chains, like all those pieces make it really, really hard for us to believe there's a path to 100x. With that said, there are great VCs who do retail and brands, and that might be good for them. But I would be, if I was fundraising for that, I would be really, really focused. Next one, mOOm, I would say conceptually, it sounds really, really cool. Very niche. There's only a few VCs that do gaming. Gaming is really, really hard for a lot of folks because there's kind of the haves and have-nots. If you really want to get a game out there that gets to mass scale, like Jordan is thinking about, you actually have to have hundreds of millions of dollars, right, in place, like between the production, getting out there, customer acquisition, which is super expensive in that space, just makes it a very sort of tough space to play in. So I think you have to really focus on specialty VCs who do mobile gaming. I have to agree with on the last one. I have to agree with some of my colleagues here, where PropertyLens is probably the most interesting one that I've seen here today. I would say there's a lot of questions there on, is this a direct-to-consumer play? It's like one of the issues potentially with the direct-to-consumer plays that most direct-to-consumer plays, having built a $3 billion company that does direct-to-consumer subscription business, right, is that you have to go beyond the transactional. If it's a one-time thing when I buy a house, right, and then the value goes away to a certain degree, I think that's hard to justify. The customer acquisition costs are high in real estate, prop tech, and then it's a one-time transaction. So like if it's direct to consumer, how does this really translate to an ongoing sort of revenue stream? If it's through agents, I've just found that business to be really, really hard, working with brokers, brokerages, agencies, just bombarded by all this technology. And this is a good offering for them that they can, forward to their customers, but it's just really hard channel to sell through from my experience. So that's kind of my maybe concerns about PropertyLens, but it is probably the more interesting one, the ones that we saw. And again, sorry if I hurt anybody's feelings. I know you don't have a chance to necessarily respond to all this, but I'm just trying to give you an idea. At least,
honestly, I really appreciate that, because the reality is, I think at the end of the day, being nice to somebody and being dishonest or untruthful is doing them a disservice. So I know they appreciate that. But thank you for that. Miriam, I'd love to get your thoughts on what you heard today, some recommendations, some feedback.
I'll try not to be too repetitive. I think that the prior speaker said some good insights and comments. It might just be the most recent thing that I've heard biased, but I also thought that the last presentation was really interesting. It definitely is a relatable problem. And I also think that the market segment that they're seeing interest from actually is very logical, makes a lot of sense. And so I'm curious to follow that business and see sort of where it goes. I think, I liked Hook Security, but agree that, it might not be necessarily like a VC backable business in standard terms, but, definitely a business that could have an acquisition at the Series A, which it sounds like the founder's thinking about, and that could be a good sort of end game for the business. But overall, I think everyone did a really great job, and I concur that it's hard to keep your comments within 5 minutes, for sure. So thanks for putting yourselves out there. Really appreciate the opportunity to hear your presentations.
Thanks, man. I appreciate that. Tim Holliday, feedback, thoughts?
Yeah, I mean, great presentations. I actually really appreciated Itamar's kind of analysis on each, and I think I'd probably share most of those views. We are a consumer group, so we do have a little bit of that different lens, which helps for certain companies, and then others just don't resonate with us. I think in this case, so again, not to be repetitive from the last two comments, I would just simply add that in a 5-minute pitch, or any kind of pitch, of course, within the first 10 seconds, it should just be crystal clear what you're about. And so pointing back to Bob and his presentation, it's like, we are Carfax for houses, done. In Silicon Valley, there was a whole era of, we are Airbnb for this or Uber for that. And those analogies work, as tried or as kind of simple as they may be. They work to get the ball rolling. Then the audience gets their heads around roughly what it is. It's almost like we kind of already play out the company in our mind, and then looking for confirmation bias from Bob as he goes through the rest of the 4 minutes and 45 seconds of, what he just said. How does that align with my worldview? And then we go from there. So I think that was well done, and that not everyone did, I think, do that as well. And that's just a little bit of almost presentation kind of feedback. I think technical feedback, Itamar hit that pretty well.
Awesome. Thank you. Appreciate that. I think we got Dan, and then we'll open up for some questions. Dan, are you still there? You got any feedback on what you heard today? Dan Glunt, are you there? I see the comic version of him. I don't see the real version of him. So, all right. Oh, there he is.
Yes.
Oh,
Sorry about that.
Hey,
I was
no problem.
clicking too fast. Somebody said it, nailed it. First 10, 30 seconds. Like, I don't want to be 2 minutes in with the aha of, this is what you do. The proverbial elevator pitch of 30 seconds is so important, but so is enthusiasm. I was an insurance guy, and I got more business because they said, you love insurance. Your whole staff, it's infectious. Like, I want that enthusiasm coming through. For me on the team, I have to fall in love with the founding team or the founder, and enthusiasm is part of it, and clarity and vision, their ability to attract and retain top talent. We saw a little bit of that today. There were a couple that could probably be coached up on that, but all in all, great couple of hours spent. Thank you.
Thanks, Dan. I think that's going to be the comment of the day, Dan. I love insurance.
I don't think that's a sentence that's ever been said before. I'm sure it's the first time. You guys hear it here first.
Hey,
and I love it, Dan. You're exactly right on the enthusiasm side.
Yeah, I retired at 40. I love unsexy businesses, and if you can make something unsexy sexy again,
it's true.
You'll never work.
It's
and I would love to see more unsexy businesses too. Like, we've got a lot of AI model, but like, where's the porta potty rental guy, the guy who's unseating Bob's barricades? Like, I want to see some dirty, unsexy businesses too. They're very investable.
We're going to put that on the radar. So, I think if I was going to rank it, I think I love insurance might be number 3. I think number 2, I love the dentist. And number 4, I like the IRS. And number 1, I like the IRS. I think those are the in that order.
Yeah, that's it.
I'm throwing, does this look infected?
Hey, listen, first of all, thank you for all the nice words about PropertyLens. If you each want to write a check for $1 million, we could wrap up our funding today.
Yeah.
So,
that's how it
all right,
works.
let's do this. We got a few minutes left. If any of our participants or attendees today have a question to our investor panelists or myself, raise your hand and I'll call on you. Don't make it a pitch, make it a question. Anyone have a question? And I'm going to start off, and I'm going to just get a general. Let's do this. Let Katrina jump in first. Katrina, why don't you jump in with your question?
Hi, thank you for having me today. This is my first experience, and I've been enlightened too much. I guess my question would be for the investors. Most of you mentioned founder being very important in you to buy into. What is your knowing about the founder? Because you have 5 minutes to pitch. What do you sense from the founder straight away that it's your yes?
Who wants to handle that one?
I can take a first pass. Yeah, so I mean, you don't necessarily know in the first 5 minutes. There's definitely more digging to do, just to preface. But the things that sort of signal something worth looking into further for me are, again, I said this sort of beginning founder market fit, that there's like a logical reason that you're building in the space, in the sector, and solving a pain point that you are, right? You have personal experience, someone close to you has personal experience, et cetera. I think, just definitely the way people come across in their presentation, I hate to say it, but it does really make a difference. So I think showing for me that mix of confidence, but not coming across as arrogant, right? Willing to be humble and open to feedback, but having that sort of confidence, that's important as well. And ideally, I want to see some kind of traction. I don't invest pre-revenue, and I think founder market fit is advanced by the fact that founders actually been able to sell their products into the market and generated at least some early revenue. It's a good question.
Thanks for that. Tim, you want to address that question? I'll take the next question after that.
Yeah, I mean,
Go ahead,
Miriam nailed it, honestly. And this is where I finally learned, having only been in this business for about 4.5 years, being a founder before, there's art and science to every business and everything. This is the art side. The question that you just asked, Katrina, is the art of over years and talking to hundreds of founders, having some deep in the back of your mind pattern recognition of what really makes a world-class founder. And part of it is just interacting with world-class founders over the time. You start to see, yep, she's got it. It's the same. It's similar to so-and-so. I actually had this question asked of me twice this week, and I never have a good answer. It's very challenging. There's a presentation side of it. There's a personality side of it. There's a progress side of it. And so to Miriam's point, either you show progress through revenue, product, and market, it's working. And or if you are pre-revenue, you better be in Bob's shoes where you sold a company, you did it before, and now this is your second, third, fourth kind of venture. So it is art. It's tough.
Yeah, I agree with that. I would
Can I
add
just
to
pile
that.
one thing on there, Scott, just to add a
Yeah,
little
jump in,
science. Just to add a little science to the conversation,
Please
because
do.
there is a little bit of science to
Oh, there
this.
is, for sure. There's
First-time founders have trouble. They typically are only successful about 18% of the time. And second-time founders, that goes up, not exponentially. You'd think it would go up a lot more, but it only goes up to like 20 to 25%. And then it goes up after the second-time founders, then it goes up to around 30%. So it's still a high-risk business no matter how you slice it. But you do increase your odds by going with a second-time or third-time founder.
Yeah.
And you make a lot of sense there. And that really comes down to the conclusion. At the end of the day, you can have a great idea, you can have great technology, but you need people that can execute on the business model. And that's really, in my opinion, where the team
100%.
comes in. Awesome. So
Can I
Matt,
say something?
Can I ask a follow-up?
hold
Sorry.
on.
Okay.
So stop the free fall. Hold on. Tim, won't you hold your question for a second? Matt, unless we have another investor who wants to provide feedback on the last question. I thought I heard someone jump in. Nope. Okay. Matt Morrissey, you had a question?
Thank you, sir.
ahead,
Everybody, what a great event. I appreciate it. Scott, I had the pleasure of meeting Scott a few weeks ago back in New York at one of his live events. My question is for the investors. I've been on Wall Street for 28 years more. So I've been a trader for the last 28 years for institutions. 5 or 6 years raising capital. A lot of the companies that I raised capital for, I don't want to use the term easy, but I was lucky enough to be a participant in SpaceX and Coupang and DraftKings, among others. I'm now going out into the smaller deals, the pre-revenue companies, the seed deals. How do people reach out to you, the investors? I have no problem getting on the phone. I built my whole book of institutional trading business, cold calling, PhDs from Harvard and Stanford. I love being on the phone and learning from people. How is it that people reach out to you? Are you averse to people cold calling you? Do you pick up the phone?
Well, now I'll get our feedback on that just a quick minute, Tim. I did an event, one of our live events many years ago, and it turned out the founder was he was an investor, and he was the first investor in AppLovin, which is a massive success today. And he made the comment that if you do something interesting, I'm going to find out about it. And so start with that. I'm a big believer, and you can my plug. I just had a webinar just about this topic, about how to build relationships with investors as opposed to LinkedIn connection, spam LinkedIn with a pitch deck. So I'll send that along with everything else, so you can get some feedback on that. But Tim and then Miriam, why don't you address that question?
Yeah, no surprise there. I mean, in the early days of our looking for opportunities in companies, Magic Spoon, Olipop, like we grinded and figured that out, and that was through kind of our trusted network pushing to them. Nowadays, there's just a ton of flow that comes to us, and that flow comes through trusted network, or at least the ones that we talk to. I hate it because in my gut as a founder, I'm like, let me reach out and prove to you what I'm doing. But in reality, we just can't field the cold calls. It comes through trusted network. And that's kind of the path that typically gets to us, at least.
Fair enough. Thank you. Miriam, go ahead.
Yeah, definitely helps to get at the top of the pile of folks to get back to when it's coming through someone that we know and trust, co-invested with, et cetera. But knowing how hard it is to be a first-time founder, and you've got to like get those initial, few investors in, and that is the hardest part of fundraising. I try my best to take a quick look at as much stuff as I can that comes in through LinkedIn. There's so much, it's impossible to look at everything. We have an application on our website, and we get back to everyone regardless of whether they're a fit or not. So try to kind of democratize things a bit. I will say one thing though, I think for the stage that we're investing at least, which again is primarily seed stage, it's really important that we're hearing directly from founders, preferably the CEO. If someone else is reaching out as like a broker on their behalf, like I rarely take the call.
Yeah, Matt, if I could just give we also have a business like sounds like you're trying to do. We also raise capital for startups. We have a brokerage firm that does that outside of our venture business. And venture capital firms typically don't invest through brokers. They don't want to pay the fee. They don't want to pay the 5 to 10% that everybody charges, because a lot of them don't need to pay the fee, or because they don't see the value in it. But we are more successful at selling to high net worth individuals, former entrepreneurs. Those are in family offices. Those are the folks that don't have the deal flow that the VCs have. So they really appreciate it. So that's where we found more success in that business. So just kind of an aside.
Awesome. And I would personally recommend events like this.
Thank you.
That's my own personal plug. So awesome. Let's take one or two more questions. If we have a question, raise your hand. I'm happy to have our panelists ask that question. While I'm waiting for the next question, I'm going to ask the very obvious question. Obviously, we have had, let's call it a turbulent market for a turbulent environment. How is that affecting how you invest, when you invest, and where you invest? So who wants to answer that question? Ed, you're unmuted. I'm going to pick on you first.
We've already had one of our companies kind of socializing some different expectations. We've got a company right now that's in phase 3 trials, and it's coming out of phase 3 trials probably in September. And we would expect, with the results being unblinded then, that we would expect something to happen in kind of Q3, Q4. What that something is, we were thinking the something was an IPO. The something has changed now to maybe an acquisition, right? So all of a sudden the expectations have to get dialed down a little bit. And everybody who's in the syndicate is all of a sudden thinking they may have to write another check to maybe ride out, because we're expecting maybe some new tax policy and some deregulation that might flow into next year, that might improve the market next year. But, it's a bet we have to get more educated about before we make it. So that's one immediate reaction that we have.
Fantastic. Anybody else want to handle that question? Go ahead, Tim.
Yeah, I mean, I agree with that, and there definitely is real market effects that impact, but we're constantly trying to have the discipline to not kind of knee jerk, and Ed's not, that's not the comment, but like to not kind of knee jerk on certain things until it's real. And then when it's real, then you got to deal with reality, right? When the regulation hits, when this hits. I mean, we see that with the tariff stuff where it's like day by day, things are going up and down, which impacts our portcos directly, impact on many of them that are importing whatever. And so as an investor, we try to look at the 10-year time frame, not get too hyped either way, up or down, and just have discipline, and it's tough.
Fantastic. Anybody else want to address that question? Bill, you got a question? Jump in, Bill.
Yeah, hi, thanks. I was curious to get some thoughts from investors on when you're a company that knows you have a missing component in your team you have to address, or some gap. You got to address it, and you're looking for help in addressing it. How do you see best presenting that and addressing that?
That's a really good question. So who wants to take that one? You know, might be for what it's worth. Jump in. Go ahead.
Sure. I'll just jump in. I think the default that founders often go to is like, we need to find someone who's going to be a long-term, full-time fit. And that's certainly the ideal in some cases, depending on the role. But, there's ways to think creatively that sometimes can actually be really beneficial and help manage the cash. So, finding people who are fractional executives certainly can help. And that can actually be a good long-term fit depending on the business and the need. Finding people who start as a sort of contracted role who can roll into something that's more full-time. Again, even as an executive team member is something that often, works well. And then, just be constantly looking for those roles, whatever that role is, and trying to figure out what are really the qualities and the skills that you need. And, if those adjust over time, which happens often, especially with executive roles, just manage those expectations as well and adjust who you're looking for in the fit.
Fantastic. Tim, you want to handle that? Go ahead, Tim.
Yeah, and I agree with Miriam. And in the meantime, just absolute candor and transparency with investors as you're talking to them. Like this is a gap we have. We know it. Here's what we're doing in the short term to kind of handle things and keep things moving. But we are actively taking Miriam's advice, looking at filling in the gap. And by the way, Mr. Investor, do you have any thoughts and ideas? And, anybody that kind of a thing. It's just being very straight up with your gaps. I as a founder, I've been a founder way longer than an investor. You had the tendency to want to just like, no, we got this, and kind of hide some of the scary things under the rug. The investors don't need to see that. We'll handle it for now. Just being straight up is the way to go.
Yeah. I think I agree 100%. I think it's obviously humility and integrity are still traits that are valuable to investors and everybody else.
One of the rules we try to instill in our founders, Bill, is a sense of urgency, not just transparency like Scott was talking about, but there's also the sense of urgency. We can't take time to have this, to train somebody, bring them up to speed over 6 months and, make sure that they get the right coaching and all this other bullshit. And this person's got to be ready to hit the ground running. So, when you're hiring somebody, whether it's a CFO or it's a, head of sales, they've got to be ready to go. So you can't delay, you can't be delaying the process and be thinking about it for 6 months or 4 months, whatever. You got to go. So, it's go time when you're a startup founder. So,
yeah, I agree. Yeah. You got to be building the company while you jump from the airplane. So I 100% concur with that. Well, we're done for today. So a couple things I'll close with. I'll be sending out a recording of this presentation. I'll be sending out some startup tools for all the attended and registered. And again, I want to thank our investor panelists, congratulate our entrepreneurs that presented today, and thank all the people that attended. And as I always say, if there's something you didn't like, tell me. If there's something you love, tell everyone else. And with that, I'm going to wish you the very best, and we'll talk very, very soon. Take care.
Thanks, Scott.
Thanks, Scott. See you, buddy.
Bye.
Thanks, guys.